This is Alan Bush with the Daily Financial Forecast for Thursday, June 20th. In the stock index futures, we are seeing higher prices today with the S&P and NASDAQ futures both advancing to new record highs. Today's economic reports were mostly weaker than expected, with housing starts for May coming in at 1.277 million. That compares to the estimate of 1.373 million, so starts quite a bit off the estimate. Also, we had jobless claims coming in a little bit less than expected, so that tended to offset the housing report's influence. Still looks like the dominant fundamental is prospects of central banks easing credit conditions this year. We already have had some central banks cutting rates, including the European Central Bank recently, the Bank of Canada, and today the Swiss National Bank. Moving over to the currencies, the dollar index is higher, and it looks like the greenback is being underpinned by a flight to safety flow of funds in light of political uncertainties in Europe. We had the Bank of England deciding to keep a rate unchanged as widely expected. However, it is anticipated that the Bank of England will be cutting at its August meeting, and of course the Swiss National Bank cutting their key rate today as expected. And in the interest rate futures markets, we are seeing futures mostly lower today. Some of this weakness may be linked to news that a large bank in Japan may be liquidating some of its position in U.S. Treasuries. Right now, there's a 66% chance that the Fed will be cutting rates at its September meeting. And also, there's a strong possibility that there could be a second rate cut from the Fed following a likely rate cut in September. So it still looks like the main trend is higher, even though we are seeing some pressure today. So the dominant fundamental, I think, is central bank accommodation is here already. Some central banks that have not already cut are likely to cut. So any break should be used as buying opportunities in the interest rate futures markets. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or ADM.